All right, hola guys, ¿qué pasó? What's going on? This is jalapablo. Thank you for tuning in. Let's jump right into this and look at Bitcoin. Okay, so here we have the 3-day on a logarithmic price action chart with the 200 daily, this big ominous gray line that just snakes up the bottom of this macro movement here that goes all the way back to like 2017. All right, we noticed that 1, 2, 3, maybe 4 places here, kind of 3.5 places we've gone underneath it. Okay, price action trajectory. Now correspondingly beneath it we have the cumulative value days destroyed, and so this is not price action. This tracks the translocation of hodled positions by smart money. So when smart money moves, say, Bitcoin onto an exchange because smart money is anticipating a sell-off and they want to short, it is reflected in the waves here, and so the time resets and it shows a drop. So that's what the cumulative value days destroyed. All the days that the position has been hodled gets destroyed once those coins are moved, either onto an exchange or into some cold storage somewhere. So, all right. So we see now. We already went over this. We see various areas of bearish divergence where smart money is getting out. Say here in 2021. And then we saw the corresponding divergence in the price action where the tops are going up, and then after that we had the sell-off, the big sell-off. But smart money was already privy to that here. Dumb money or retail wasn't, and so we're seeing the same thing again here. Now this is where we are now in this cycle. Where smart money has been getting out since December of 24, almost like a year now. Smart money has been slowly exiting their positions, whereas the price has been rising. Okay, so notice that this comes exactly at 4 years, at the 4-year mark, where we've seen historically the big sell-offs, the embarking into a winter, into a season of lower prices in Bitcoin, a sell-off, a massive macro profit taking by institutional investors. And so we saw that here. It went under the 400. The sign is going under the 400 after an all-time high at the 4-year cycle mark. So remember, we talked about this. This was that peak here in December of 17. We went down underneath the 400. Not long after that, we had the death cross, and then the price action went all the way down and hit the 200 weekly. And so in there, it hung out for a while, bottomed out, and that's fire sale prices, folks. That's when you want to buy. That's when you want to buy Bitcoin, when it's red here on the cumulative value days destroyed, or the CVDD. So the CVDD is extremely accurate in calling bottoms. And also incidentally, just because it hits the 200 weekly, it doesn't mean that it's just going to bounce from there. It can actually go under it, like we saw here in December of 22. And here, obviously, that we had, this is more of a black swan. This is the COVID dump here that we had in March of 20. So, but here we see that first big macro bear winter. It just hugged the 200 weekly here. Kind of did a bottom here, a rounded bottom, and then came back up through first the 200, then the 400, and it made another peak. All right, and so from where we had the death cross in July of 2018 to where we had the death cross in 2022 is 1,375 days. So that's the 4-year cycle. So remember, we're talking about the 4-year cycle, and in a minute we're going to be looking at the fractals of how this pertains to us today. And so we had the sell-off here. Same thing, 4 years prior, underneath the 400 for the first time. And when I say underneath the 400, I mean a daily close, a close on daily or a higher time frame beneath the 400 simple moving average. And there we kind of had the same sort of play out. It didn't fall right away to the 200 weekly. Instead, it made several attempts to get back over the 400. Once we fall under the 400 and have a daily close, historically in Bitcoin, the 400 acts like an iron dome. And I haven't seen it go back up, prevail through the 400 after making a macro all-time high in the cycle metrics of it. So we see several attempts here. This is in 2018, and then the fall, and then the dump down to the 200 weekly. Same thing here. Now let's fast forward 4 years to February of 22. Here we see we had several attempts at the 200 and the 400. Notice how in both the 200 and the 400s converge. Several attempts, and then down to the 200 weekly. In this case, we went real down. This is the one we went down to 15,000. Okay, remember this. This is when everything was just going nuts, right? All the I think there was FTX went down, and Celsius, and all of these things just started going bankrupt, right? And filing for chapter bankruptcy. This is that here, and then this is well beneath, incidentally, the 200 weekly, and then it came back up, and then we had this macro bull market that we've been in since, well, the golden cross was in May of 23 or June of 23, and then we're still there. We haven't on the daily had the death cross yet, but we're getting extremely close, and that was in 2018. Okay, so from there, when all that mayhem was taking place in the crypto markets to where we are now is, guess what, folks? 1,375 days. Yes, 4 years. It's been 4 freaking years. All right, and we are on the cusp of something else. We've slipped down again beneath the 400, and we've had a daily close. We've had several daily closes. We've been under the 400 now for, I don't know, a month already, with closes and dropping down more and more. And what's more, we've had attempts back up at the 400, which we're going to look at in the fractals in a moment. I just wanted to show you this sort of macro schematic here on the CVDD, how it interrelates with the price action on the logarithmic on the 3-day. All right, and so with that, this is the fractal now here. Okay, so this is today. And I went ahead and I took off all the white coffee and features where usually I label all this stuff, but I find that it clutters the map and I mean the chart. And those of you who've been following this channel should already have your feet wet in some of the nomenclature, so to speak. You know, the buying climaxes, the automatic responses, the secondary tests, the automatic rallies, the upthrust after distributions, and all that stuff. So I spared you all that, and all I did was label in the fractals the UTAD, which stands for upthrust after distribution, and then the subsequent LPSYs, or last points of supply, as it marks down. This is a macro distribution that we see at the end of both of these cycles. Now this is 2021 and 2022, okay? So we're coming up almost on like 4 years here. All right, so this is that fractal we just looked at, the previous, the beginning of the bear winter of the previous macro cycle. This was setting the stage here from where crypto dumped and everything started going bankrupt, like we talked about Celsius, FTX, and all that stuff, Binance, and you know, Binance didn't go bankrupt, but like all that stuff started going on, and as it were, like the curtains were pulled back and the wizard was shown, and the wizard was shown to be a scammer and someone who purported to be someone who they were not, and doing nefarious things with other people's crypto, basically acting as hedge fund operators. But anyway, unlicensed, but that's another story altogether. But this was the beginning of it, and if we play the bars, we could see what happened here. Now, you know, before I play the bars, actually, let me pause this here. Look at this micro trend support line. See, we're starting a micro trend support line also here. Remember, I drew out this micro trend support line a few videos ago before we had the inclining or the series of higher lows forming, and I said I'm just going to draw this out because I postulate based on the historical metrics that we're going to have a micro support line here forming, as it were, something that resembles a rising wedge. How did I know this? Well, I just went off the fractals, because so far the fractals have been replicating thus far. There's no reason why they shouldn't keep replicating, at least beneath the 400. This area here, this pocket, is what we want to focus on, because this will make or break our technical analysis. This pocket here, you see these waves in here. Notice how the 400 and the 200 are converging, and they're becoming a top, a very strong kind of, remember we talked about the Iron Dome. This is the Iron Dome, right? I know Israel has an Iron Dome. This is the Iron Dome of crypto, and the attempts bouncing off the Iron Dome here. 1, 2, 3, and so we also have, now go to today's fractal here, and we're kind of having some attempts also from this area of mitigation here that kicked off from this accumulation range here. We drew from the bottom of this terminal shakeout where I marked this with this gold zero here, this gold circle, bouncing off the 400. This whole area here is a major support zone. It was a support zone 4 years ago, and it's proving to be a support zone now. And so what the price does between this major support zone off the prior TSO or terminal shakeout area to now underneath the price action consolidating beneath the 400 and the 200 Iron Dome is going to show us exactly, more or less, I shouldn't say exactly because nothing's exact, right, what we can anticipate in the weeks to come with Bitcoin. Now, what I'm looking for is for these waves now to continue to rally. All right. Now, whenever we see like Bitcoin rallying, it's in the news. Bitcoin just jumped 11%. I don't get excited about that. I don't feel like I have an impulse to buy, thinking, oh, we're fixing to set another all-time high. No, what I am looking at is potentially more liquidity sweeps up to the north, up to hit this area here where the 400 looms above. Presently, the 400 is at $101,097. That's where the 400 sits. We haven't come close to that. We're topping out somewhere around 95, 96 Gs, and we're bouncing back down. So what we're forming right now is a very thin rising wedge. We've already had a couple. We had a couple rejections off that area, and it looks like the price is getting narrowing more and more, coming to like maybe like a knife point. But I'm not going to say that we're in a rising wedge just yet, because something can happen over the weekend, right? President Trump could put something out, or Elon Musk can say something, or China can do something, or Israel could do something, or I don't know, SpongeBob can say something. I don't know. And it could cause this market is so highly and disgustingly manipulated that anyone with any kind of clout that people listen to can say something and cause everyone's technical analysis, at least temporarily, short to midterm, to get absolutely blown to smithereens. So I'm not going to say this is 100%, it's a done deal, but what I am saying is what it looks like now is that there is a thin rising wedge now, slowly, inexorably reaching up towards the top of this 400 simple moving average, kind of like it did 4 years ago. Now, we look and we see the bounce, we see more of a confirmation of the governance of this rising wedge of the bottom support line here, and we're going to see, now remember this is 4 years ago, one more big attempt at the 200 and the 400. They've almost merged and become one cohesive simple day moving average. And that last support, this last support right here shows that, okay, see the breakdown through it. And it broke the micro trend support line here. We see that, right? And once it broke that micro trend support line, it fell back down into this general support area, this macro support area that, remember, we go back from the TSO of this accumulation range, consolidated in here, and this anyone could tell you just by looking at it and reading the VSA, looking at the rising supply and the vertical bar volume, that this is going to be a redistribution. Sure enough, it fell all the way down, and this is the 400 here. This is the 200 weekly. It fell right beneath the 200 weekly, and then the 200 weekly became a point of resistance for it. So now, how does this pertain to us? We're going to be looking for sort of the same thing, subsequent attempts now, and I'm gonna anticipate the 200 to start snaking down with more zeal towards to rejoin its brother, the 400, and kind of become one. And as this happens, the price action is going to have one powerful push. Maybe look forward around Christmas, or maybe in the new year, after the new year. I anticipate one strong effort here, but the effort is going to come on low demand. See, like this last attempt here, this last push to break through the 400 Iron Dome came on low demand. We didn't see high demand. We saw low demand, and that's how you knew it was liquidity sweep. You see, smart money had already exited. Smart money, the bulk of smart money has already been out, and so now they're just trying to get the highest prices they can at the crypto that's already overbought crypto. So they're just trying to exit. It's exit liquidity, and at that point, that's all this is, and that's why there was such low demand, because dumb money or retail can't generate that sort of institutional volume that you see that actually moves the markets. All they can do is rise up on hollow legs, on unsupportable rallies, because smart money is no longer under there underwriting it and lifting it up. They're already out of the game, out of the picture. So hope that makes sense. And so, all right, and then we already looked at this. One last thing here. Okay, now this is price action on the 10-hour on top, okay, and on the bottom we have the STH NUPL. And I just real quick want to show you something on this. This further confirms the bearish bias that we still have. I'm going to show you this in fractal format as well. Now this is the same thing. We've gone underneath the 400, okay, and this is that kind of rising wedge that we talked about. So far the waves have been less than impressive. Like it was 4 years ago, they were going all the way up to the 400. They weren't going through it. They're bouncing off it, but at least they were making that sort of spread. We have a lot lower spread this year, okay. Now look under here on the STH NUPL, the net unrealized profit losses. This is the smooth moving average. Remember we talked about this in the last video. So the NUPL line, when it's above the zero, it's the zero line here is the yellow line, okay? Anything above this line, short-term holders are in profit, considered to be in profit. Anything below, they're experiencing loss. When the smooth moving average above, when we have a double red, that is a red coming through the smooth moving average on top of the zero line, that's usually meaning that we're going beneath the zero line, and we have the double red going beneath here. Okay, so this means that it is people are in loss right now. Short-term holders are getting wrecked. A lot of people are wrecked right now. That might be you. You're wrecked. You're sitting in wrecked altcoins. You're sitting in stuff as underwater as the Titanic is underwater, beneath 2,000 feet of water. That's what it feels like right now. Okay, and because that's what it is. If you bought up here, if you bought above the 200 and you sunk beneath. Okay, and so under here on the NUPL, we do see though that some yellow is beginning to emerge in the trajectory. This is kind of like the vortex indicator, where the trajectories are starting to turn bullish underneath. So we have the NUPL line, and then we have the smooth moving average. With the smooth moving average, we are now starting to see a little bit of yellow. And this, to me, can be a token of what we spoke about, the waves starting to now generate some considerable upward energy, pushing up back towards, in preparation at least, back up to make attempts at the 400 and the 200 moving average as they begin to converge. And you see the 200 turning down. It's kind of like this lazy turn, and the 400 is still winding up. These two look like they're going to converge. In fact, I absolutely believe that they will. In anticipation of this, I find it interesting that we're starting to see the yellow come out of the simple moving average in the STH NUPL beneath. Okay, so this could show people, if you don't know any better, you could say, oh, we're getting ready. We've bottomed out here. And now the yellow is beginning to come up. See, like here, see how we had this like triple bottom here, here at this accumulation range, and then we came back up. See how the yellow smoothing average underneath the zero line started coming up beneath the red NUPL, and then here also, and in several other places. All of this is transpiring beneath the zero line, incidentally. Okay, so, but it's different here because all of this has taken place underneath the 400. This wasn't underneath the 400. This wasn't underneath the 400, where this yellow began to emerge here. See this yellow here, this yellow line here. This is what I'm talking about, the smooth moving average here, and the smooth moving average here. Even though the NUPL is still, itself is still red beneath the zero line, all of this transpired in the pocket between the 200 and the 400. And then we have yellow now coming up here, but this is beneath the 400. This is a very, very important detail that must not be overlooked. Okay, now let's go back to this area in the fractals of where we are 4 years ago. Here we are here. This is January of 22. All right, and we see here in the same area beneath the 400 where we are with the NUPL, we see yellow coming in right here in the same area, right beneath the zero line. We're red in the NUPL. We have double red, but we're now yellow is emerging. Yellow is emerging. What did that indicate? The yellow indicated, and after the yellow, you know, if you wanted to swing trade this or if you wanted to scalp this, you would have made some good money, because indeed the yellow could denote bullish activity, at least on the short term. And so indeed it did, and that's when we started having all of these attempts. But notice the attempts were not able to prevail above the 400. And even though both the yellow NUPL, the yellow smooth moving average and the NUPL itself turned yellow above the zero line here, here we have a triple yellow. We have the yellow smoothing average, the yellow zero line, and the yellow NUPL, but all of it still again is beneath the 400. So this is under the 400, and as long as we are under the 400 in the price action, we could have triple yellow in the STH NUPL and still be in dangerous waters. We could be treading on very, very thin ice. Everything hinges on the litmus test, as if that last push were able to prevail through the 200 and the 400. Here we failed and it dropped. But if it were able to, say, go through it both and establish support here and begin to see high demand register in the vertical bar volume, and then start marking up, have a proper buying climax, automatic response, secondary test, and have a floor here, an established floor, and a classical Wyckoff accumulation range begins to play out, then and only then we can anticipate perhaps we are en route for another all-time high, and we are far away from any sort of bear winter, any kind of crash, any kind of total devastation as far as, you know, the bulls and those who are still holding crypto way up here above the 200. But we see that didn't happen, and indeed historically I haven't seen that yet with Bitcoin, not in the 4-year cycle. And so that's why it's so important to observe these things, scrutinize these things, take all these things and weigh them against each other and in tandem with other indicators and in conjunction with volume spread analysis, and even Elliott wave can play into the factor. But most importantly, we have the pattern recognition, we have the historical price action, we have volume, we have the tops and the bottoms as delineated in the cumulative value days destroyed and the STH NUPLs, and we can even go into other metrics as well. Maybe we'll go into those in the next few videos, like the pies and all that stuff. We can look at all that, but this is sufficient. All of the readings that I've gotten so far have been indicating and pointing to the same thing. The potential of future upthrusts that are going to amount quite possibly to nothing but glorified liquidity sweeps to the north, but not high enough to break 100. Well, right now it's 101,000, I think, is the 400. Unless we can get above the 400, and establish support, then all of this stuff, all of this interplay beneath the 400 and beneath the pocket. I mean, we're not even in the pocket right now. Is going to amount to nothing but a series of bull traps, and all along the 200 weekly is down beneath that big gray ominous line. That's usually where Bitcoin bottoms out. Remember, we looked at that at the beginning of the video, and that is calling. It's like a siren. It's calling the price action. Come to daddy, come to daddy, come to daddy. But not before it takes some of the blood of the bulls and the blood of the bears before we get down to that area. And with that, guys, that is going to wrap up this update for today. I hope you got something out of this. Like, subscribe if this sort of technical analysis appeals to you. I'd appreciate it. It kind of encourages me to keep doing it. None of what you've heard is financial advice. I hope you realize that. If you've been following this channel for any amount of time, you should realize that. I wouldn't listen to anyone on YouTube, including me, most of all me. Just do your own research, and I'm quite confident that you'll kind of come to the same observations, the same general consensus, the same overall bias as I do. If your technical analysis differs in any way, I'd love to hear from you. And also, if you have any kind of need outside of crypto that perhaps you would like prayer for, you can contact me, jalapablo@gmail.com, or you could just leave a little comment below. It could be totally anonymous. Just let me know that you need prayer, and I'd love to come into fellowship with you, especially as we enter into this holiday season. There's a lot of depressed people out there, and so really the reason I have this channel is to reach out. It's kind of like an extension of ministry for me. So if anything at all, you don't even have to be a believer, you don't have to be a Christian, anything at all that I could just come into fellowship and prayer with you, I would love to do that. I would be honored. And so with that, guys, I'm going to let you go. Please have a wonderful day. Be kind to people. Humble yourself beneath the mighty hand of God, and God will exalt you, okay? God resists the proud. God resists the proud, but gives grace to the humble. Maybe this is the season of grace. Maybe this is the season where you discover God's purpose and plan for you. That's my prayer for each and every one of you. For those who have ears to hear and hearts to receive, may God richly bless you in the name of the Lord Jesus Christ, who loved me and gave himself for me. He gave himself for you too, and he loved you also. So take that to heart, guys. Adios. I love you. Bye-bye.